Hi everyone and welcome to today's morning report on Wednesday the 23rd of September with me, Rich Perry, market analyst at Hantech Markets. The European session is actually remarkably positive, considering the fact that we had the Chinese flash manufacturing PMI came out earlier at a 6-year low. 47.0 was the expectation, and 47 was the number, and it was actually lower than you expected, 47.5, and also lower than last month as well. So those Chinese manufacturing data continues to deteriorate, and that certainly had an impact on the Asian session, which was down across the board. But risk appetite has sort of stabilised in the European session with, first of all, the oil price, which is about % higher in early trading, and also the fact that we had the French manufacturing PMI that actually showed expansion, having expected to be in contraction mode, 48.5, that actually moved to expansion, which is a very encouraging situation there for France. So maybe that certainly looks as though that that's the way the Europeans are sort of viewing this move. Obviously, China continues to slow down, but the situation in Europe continues to be one of an improving situation. So it's interesting that the way that this outlook is being sort of looked upon. Now, if you look at the 10-year yield, for example, US 10-year yield, that's actually higher, and that is obviously an indication of improving sentiment as Treasury yields go higher. And that is reflected in the equity markets today, and also the support that's been formed on the euro. The dollar is back at that big neckline again, 96.30. That big neckline that I've been talking about a couple of months ago, which was that top pattern. That is now once again resistance, and it'd be interesting to see if it can sort of break through it decisively. It had a couple of pokes above it earlier on in the month, but couldn't sustain the move. But we'll be interested to see if this happens, and that sort of translates to 111 on the euro, and I'll talk about that in a bit. But there's that slight uptick in the oil price as the oil price continues on this fairly messy sideways consolidation. That certainly suggests that that's certainly helped the equity markets to find a bit of support today. That takes me to what we've got out today. Not a great deal, actually. Now we've got the European flash PMIs pretty much out of the way. The Eurozone data came out just now, and was basically in line with expectations at 52. But the US data this afternoon is at 2:45. And it's expected to come in at 53.0, which is pretty much in line with last month. And then what we have got is the for focusing on back on the oil price again, we've got the weekly oil inventories for the States. It's expected to be again in drawdown, actually, depending on where you get your estimates from, is between 0.5 million barrels and 1 million barrels drawdown, which would presumably be supportive for the oil price again. Certainly last week's surprise drawdown was supportive, so it'll be interesting to see what happens this week. But that takes me to my chart of the day, which is the euro yen. Now, euro yen has been a bit of a, I mean, it sort of almost formed this top pattern, and I spoke about that potentially being a breakdown. It didn't actually in the end do that breakdown. You saw the RSI rebounding from that, and then it sort of rebounded all the way back to this 137 key resistance again, 137 being a key sort of overhead barrier, again failing at that 137 level and sharply lower. Last 3 days in a row, sharp bear candles. But what we've seen is a bit of support coming in earlier on. That's as in the wake of that French PMI data, the euro's sort of strengthened a bit, which has helped to find support. But it certainly looks as though this chart is still putting pressure, I think, on this key 133 level of support. It is still a range play, but it still does look near term as though these these momentum indicators are putting pressure to the downside. Stochastics falling away, RSI falling, and with further downside potential. The moves towards the range lows have tended to be seen with the RSI pushing back towards 30. So it'll be interesting to see if that continues to the downside, because there is further downside potential in this move. Now, this is the hourly chart, And if I zoom out here, you can see this big top pattern that actually gives you an implied target, minimum implied target of 133, which is pretty much where we got to now, and a maximum implied target of 132.50. So that would suggest that we could well see further pressure on this 133 and maybe even that 132.10 reaction low that we saw a few weeks ago. That is the pressure. But look at this. I mean, we've had this little mini rebound overnight, but in the context of the selling pressure in the recent days, is not really registering a great deal yet, and it's just effectively unwinding this oversold momentum on the hourly RSI, really. So it probably is just an opportunity to sell, because it certainly looks like the momentum is with the downside at the moment, and that is what the daily chart is also telling us. So this initial sort of selling pressure that we've, the initial sort of rebound should, I think, now start to hit against selling pressure once again, and I think I would expect further pressure on 133 figure in due course. So I wish you good luck in your trading on the Euro Yen today, and I'll speak to you later. Thank you.